Good afternoon, and welcome to today's edition of the Coal Scene. I'm Chris Hamilton, and I'll be your host over the next half hour or so. I'm joined here in the studio by Alan Stagg, who is president of Stagg Resource Consultants. And Alan's been around the industry for 40 plus years. He's an accomplished expert in the area of energy and mineral resource management and valuation. And we're going to be talking about a number of production trends and factors that impact certain mining operations within certain coal-producing regions of the country, with a lot of concentration right here on eastern central App productivity and operations. Alan, thanks so much for coming by today, and look forward to your insight and discussing these critical issues here today.
It's my pleasure. I appreciate you having me here.
As I indicated in that windy introduction, you've been around the industry for a long time. You go back with doing some work in terms of managing and evaluating these coal properties for several decades. Why don't we begin? Why don't you talk a little bit about yourself and your company?
Certainly. I'm a geologist by education and by experience. That's basically since the time I've left college, that's what I've done, is practice geology. I consider myself an economic geologist in that I deal primarily, most of the focus of my work has been on understanding and dealing with the ultimate operation of and development of properties. So I deal a lot with costs and operational issues as they relate to allowing properties to be developed. And I've been doing it for more than 48 years. And about 37 years ago, I left industry and started my consulting practice. And I've been consulting ever since. Moved here in West Virginia in 1977 from Salt Lake City, Utah. And I've been here ever since. And it doesn't look like I'm going anywhere for some time yet.
Well, we'll maybe come back a little later to that 1977 time when you came here, because that was that carried a lot of uncertainty with it to coal, as I recall back. That was sort of during my earlier career in mining. It was following the oil embargo days, and coal was sort of a renewed resource and base fuel at that time. So the times, the challenges, seems like the industry's always had challenges of one kind or another.
That's true. If you step back, there are some clear cycles, and many of them are a decade or more. The decade of the 70s was one of them, starting about 72 with the oil embargo, and culminating about 81 with the recession. But it was a wild and woolly time in the coal industry.
Well, and I mentioned that time too because it just occurred to me as I was talking, or as you were saying something, that the prices have been so volatile over the years, and it seems like after a 20 plus year of those prices going downward, they regained to where they are today, and have over the past decade, and have gradually crept upwards to where they are today, or where they were a year or two ago. And that was following a relatively strong market and high pricing back in those late 70s before it started to decline.
That's exactly right. I've always maintained that one of the worst things that ever happened to the U.S. coal industry was the so-called coal boom in 1974. And I was very active in industry at that time and lived through that and was in the middle of it. What it did for the next 8-9 years hurt the industry badly, because by the time 1980, 81 got here, we had done a study, there was roughly 250 million tons of excess productive capacity in the U.S. coal industry, all driven by this belief that prices would just keep going up and demand would just keep going up, and all of a sudden the recession hit and there was this tremendous overhang, and it took the U.S. industry more than the 80s, in the early 90s, to get through that. The 80s was one of the toughest times the U.S. coal industry's faced in decades.
There's a lot written about the industry today. And I know there was a conference that you spoke at, I believe in Pittsburgh this year, about some of the reasons behind, some of the factors behind the decreased productivity, not only here in West Virginia but throughout central Appalachia. Seemed like some refer to it as a perfect storm. A number of things came together and converged concurrently. Could you elaborate on that some?
Certainly. I think the fundamental point to start with is to recognize that coal is a commodity. Basically, that means that any unit of coal can replace some other unit of coal, that they're fungible. That's not strictly true. There are classes and ranks of coal, but generally speaking, within a category of coal, to a large extent, it is fungible. So commodities have their own way of behaving, and they're very susceptible to supply and demand, and that is the driving force behind the coal industry. So in any given period of time, you seem to be either going up the curve or down the curve as supply and demand swings, and that's the case, and that's the case with the coal industry. But there are a number of factors that enter into that, how commodities behave. And for coal, there are a number of factors, and they are, generally speaking, they're somewhat independent of each other. So you can't really create a model to predict how that's going to happen. West Virginia is an example of a declining reserve base. It's been mining here since the late 1800s. There has been a tremendous amount of coal extracted. There's a lot of coal still in the ground, but that does not mean that it can compete with its other commodity competition. So you get into a lot of regional issues. Illinois Basin, the Powder River Basin, Northern Appalachia versus Southern Appalachia, Kentucky versus West Virginia. Those all enter into it. But the cornerstone really is those reserves, because no mining company, no mine operator, no foreman, no mine manager really can do any better than the reserves they've got to work with. And there are physical issues associated with those and quality issues, and that's what you have to overcome. And we have a very, very much of a depleting reserve base in West Virginia.
Well, we've been mining here for a couple hundred years, yeah, as you point out. And throughout the 80s and 90s, we've become much more productive than we have been, which stands to reason. A lot of new technologies introduced to both underground and your surface operations during that time. In fact, our world we live in has been transformed by a lot of those technological advancements. So productivity went up, efficiency went up. We'd like to maintain that safety and environmental quality went up concurrently, or higher levels were achieved. But the fact of the matter is, 10, 15 years ago, we were producing averaging 165, 170 million tons annually out of the state of West Virginia, and that has dropped off some. We'll probably finish, I'm told likely finish 2012 in the 130 million ton range. So going forward, and of course that's not the only reason that those tons have dropped off this past year. There's a number of other factors. I think it's fair to say. But going forward, do you see the state maintaining, the kind of level where we are today, or will it likely, continue on a decline? And if it does,
where will it stop?
Where will it stop, and what degree will that slope be?
We're in a down, certainly at the bottom of, hopefully at the bottom of a downturn right now, and that has to do with global issues and domestic issues, economic issues, economy slowing that were running red hot a couple of years ago, like China and India. Europe has a tremendous amount of problems. It appears that maybe their form of government is not going to be able to sustain itself, the European socialist model, and I'm not getting into politics, but that's just a fact. And so there's a lot of issues in Europe, and and their demand is down. But certainly, you can expect that to come back. The economy to come back. What I've seen, a lot of economists think it'll be slow. It'll be a gradual pull out of this, and we've been 4 years now trying to get out of it and have made some progress, but not a lot. So I think one can reasonably expect that the coal industry production in West Virginia will increase. I don't believe it'll ever go back up to where it was. I don't think there's any basis for believing that, and I certainly wouldn't want to try to predict where it might go to, but let's say in the next 2 or 3 years, but certainly I expect it to come back. Over the longer term, it's been declining now for several decades, just a very steady decline. Entire Appalachian coal field has, and that's partly a reflection of the age of that field. So there's been a significant decline. The factors that West Virginia has to overcome gets back to some of these, the nature of our reserves, and to an extent regulation certainly. Some of these factors are very broad. They affect the entire industry. Some are very specific. They affect segments of the industry, taxation, labor force, things like that. But again, West Virginia has very difficult high-cost coal remaining to be mined. So in those periods when demand is down and the industry becomes, let's just say, hyper-competitive, West Virginia is going to be, in some instances, virtually impossible to compete. When the industry comes back and it's growing and prices are rising and demand is up, then a lot of this coal can move back into being productive. But we need to recognize two things. West Virginia really produces two types of coal: metallurgical coal and steam coal. Mm-hmm. And the metallurgical market, to some extent, to a significant extent, is independent of the steam coal market. Those two markets have become somewhat independent over the last few years. West Virginia has coal that, much of the coal in southern West Virginia can go either way. It's very high quality coal. It can be burned as steam coal. Has a high heat content, low ash and low sulfur content. It also has metallurgical characteristics, so it can go in the metallurgical market. So that's one thing over time that has affected southern West Virginia's production and certain types of mines, is that shift back and forth. Those mines that produce a lower quality coal in southern West Virginia during the really good times will operate. When times get tight, you'll start seeing some of the high quality coal that might have gone into the metallurgical market because of a tremendous demand shift into the steam coal market and drive the lower quality coal out. So you have a whole cycle operating right there in southern West Virginia as the two markets fluctuate. It peaks and falls with those two markets, and that's not an insignificant factor.
You know, it's interesting. The coal industry has been in a global market for its commodity, competing for that market for many years. You know, we ship coal, I believe, to 20-some foreign destinations, all throughout Europe, and some going into China now, and India, and of course Canada and South America, just all over the world basically because of the quality. But it's met with pretty fierce competition, in that seaborne market. But I make that point because there's a lot of businesses and industries that are just now becoming more global. You know, the internet's opened up a lot of sales, a lot of marketing opportunities. But coal, West Virginia coal's been in that international market play for several decades, and that seems to be one of the growth areas going forward.
Well, again, we talk about the two categories of coal: the steam coal, the metallurgical coal. West Virginia, southern West Virginia, and southwestern Virginia, and a very small portion of southeast Kentucky, basically the easternmost part of Pike County, truly have some of the highest quality metallurgical coal in the world. There's no question about that. It's always been highly in demand, and there's a whole spectrum of qualities from low vol to mid vol to high vol. So those coals can be more competitive in the global market because of their extremely high quality and the fact that it isn't as easy to replace them as, let's say, steam coal. It's West Virginia steam coal that in the last year or two has had an incredible growth as far as exports, but that's going to be difficult to sustain, because when you start getting into the seaborne steam coal market, you're competing with Colombia, tremendously large surface mines in Colombia. You're competing with Australia, with South Africa, with Indonesia, incredible, and with the western United States, with the Powder River Basin. So all of a sudden, you don't have the exceptionally high quality product that fits a niche, such as metallurgical coal does. So there's going to be a strict dichotomy between those two, and it's a finite market. We produce in this country 1 billion tons a year for the last number of decades. The vast majority of it went into generating electricity in this country, and a relatively small percentage of that actually was used for metallurgical purposes, and a smaller percentage of that actually was exported. So there are opportunities there, but they certainly are somewhat limited, and just in their sheer volume of coal that can be moved.
Back to current productivity levels that we're experiencing. I know we have several thousand miners that are laid off, and as we indicated at the outset of the show, largely due to the convergence of several factors, regulation and EPA's involvement with state permitting and some of the rules that affected power plants on the consumption side of the business. There's been just an unseasonably mild weather patterns that has held back some additional burn. Some of the other things that play into that are obvious as well, but including Marcellus gas expanding and natural gas because of the low pricing there, perhaps capturing market. There are some who maintain that as your gas prices begin to creep upwards within certain areas, that coal could recapture portions of the market it's losing to the low cost gas today.
That's certainly in theory, that's a possibility. But as I mentioned earlier, there are so many variables, and many of them are, I think you would truly characterize as independent variables. So the Marcellus is a perfect example of something that could not have really been anticipated. In retrospect, you could say, oh, we should have seen that coming, maybe a year ago, 2 years ago. But the gas has been there, always been there, and the Devonian brown shales in West Virginia, of which the Marcellus is part of, have produced for 100 years. But they produced from vertical wells. They qualified as tight sands. They're very low producers. And it was with the advent of someone perfecting horizontal drilling and the machinery and the motor to allow you to turn that hole and go out, that all of a sudden opened the Marcellus up. Nothing else changed as far as it being there. And like a lot of commodities, and I characterize this as being similar to coal in the 70s, everybody started drilling. Well, that's what happens with commodities. When the price goes up, everybody gets in it, and all of a sudden you overproduce and you drive the price right back down. So that's exactly what happened with the Marcellus, and the fact that it was in a position to many plants to co-fire, they can burn gas or coal. When it got so cheap, it just made sense. Now, if that was the only factor in the equation, as soon as the price of gas comes back, then coal will start to compete. You could make some predictions, but you have superimposed on that the environmental issues. Gas is considered to be much cleaner. There is a bias in the environmental and much of the green community to burn natural gas as opposed to burning coal. So you have it in place, and there'll be some places it may be difficult to go the other way. Then I'll throw another variable in that could affect the Marcellus beyond that, and that's the issue with fracking. So now we have the ability to produce it and so forth, but there's a tremendous issue with the hydraulic fracturing of it. So here's another variable that we don't...
Rightfully or wrongfully.
For whatever reason.
Yeah, for whatever reason.
But we don't know how that will affect the Marcellus. So what if this factor now moves in and dampens the Marcellus production, which has nothing to do with coal, but coal could be... So that's how that branches of that works.
Yeah.
And that's why it's so difficult to predict what's going to happen to the coal industry in southern West Virginia, because you can't predict some of these things. But there's so many variables that affect it. But part of it, I think, at the end of the day, it'll be a while to get this gas bubble out. I mean, they couldn't. Storage capacity in the U.S. last year was full of gas. I mean, there was nowhere to store it. They didn't have any storage capacity. The pipelines were full. Nobody was, and they just quit drilling. And the drilling that went on was just to hold leases. So it's going to take a while to work that down. But how that shakes out at the end of the day, again, from that environmental standpoint, will people shift? I mean, will these plants shift back, or will they sort of? A lot of them will probably hedge their bets. I mean, they'll leave both options open because they understand this cycle of how these commodities work. So a lot of the plants, if they have that capability, will leave their bets open.
To capsulize or conclude with some of the things you're saying here, some of your observations and findings, and they're shared by others. As a state, we're probably not going to regain, those 170, 180 million tons a year days from West Virginia. But where we are at 130, 135 million tons should stabilize, and to the extent there's increases or decrease, it'll be more gradual over longer span of time. Is that a fair assessment?
I think so. I mean, I think it's reasonable to expect. If you look at, and I brought a graph with me, but it's mixed in a whole series of graphs. So I don't know how easy.
We're going to look at those here in just a moment.
But if you look at West Virginia's Central App, which is basically Central App is southern West Virginia, East Kentucky, and Southwest Virginia, and that is where the higher quality, low sulfur coals come from. If you look at their production over the last 25 years, it's certainly not a straight line. In fact, I see that it just came up. You can see it's from left to right. The top line is the actual tons of coal on an annual basis, and that's a 25-year period. And you can see that it doesn't decline in a straight line, but anybody can look at that curve, and if you applied a regression formula to it and made a smooth line out of it, you can see that curve's coming down. So it's hard to, in the face of that, for whatever reason, it's hard to say, oh, I see it coming back up here in a few years.
Yeah.
I think the best that the state can hope to do, that Central Appalachia can hope to do, is try to minimize that decline, because I think it's almost certain that decline is going to continue. And it's for factors that are totally beyond the control of state government, of the workforce, of the coal companies. I mean, there's many other factors that enter into it.
I don't think everybody really understands or have internalized the difference in mining between here in West Virginia and Central App and a lot of the areas versus, say, the Powder River Basin. The thickness of seams, how accessible some are versus others. I know you brought some slides. Hopefully we can take a few minutes and look at some of them here.
So put the one that was originally the first one in the
I think we can go right to, here we are.
This is it's not exactly a mountaintop removal mine. It's what we would call a ridge top or point removal, ridge top removal mine. It's done in Wyoming County several years ago. Pretty typical. I realize you can't see a lot of detail, but there's maybe 75, 100 feet of high wall. There's 4 or 5 coal beds interspersed in that high wall. They might range from a foot to 3 or 4 feet in thickness. There's a lot of material has to be moved, and you can see a relatively narrow pit to get a relatively small amount of coal. If we can switch to the next slide, there's an example of how the coal's picked up. You've got a front end loader down there loading coal, might have a 16-yard bucket on it. Let's switch to the next slide. That's just a view of the high wall. That shows a little better that you can see a few coal black streaks loaded up that high wall there, and each of those is an individual coal bed. So you can see right there you move a lot of material to get to that coal. This is a typical coal bed in the Powder River Basin in Wyoming. That bed's probably 80 feet thick. The overburden wasn't much thicker than that.
If you look close, you can actually see a vehicle and a person
you can see a truck standing down at the bottom of that in the lower right-hand corner of that. So let's go to the next slide. And that's looking down the pit, and you can see the drag line in the back. That could anywhere from an 85 to 100-plus yard machine moving that overburden. All it does is move the overburden 24 hours a day, 7 days a week. And then when they get ready to load the coal, the next slide should show that, there is a shovel bigger than most equipment that's even used in West Virginia to remove overburden. All it does is load coal. It's got an 80-foot coal seam to load, and they actually drill and shoot the coal seam. So I think it doesn't take much to realize that as far as the competition goes, you know, the price of producing that coal in the Powder River Basin now is something cash cost, something less than $10 a ton. The cost to produce that strip mine coal in West Virginia is probably in the 50s, maybe even in the 60s, certainly in the high 40s and into the 50s. Now, there are some heat differences between them and transportation issues, but those things tend to find a place where one offsets the other. So that's just one of the basic issues that's confronting. And of course, West Virginia has a very serious issue with mountaintop removal. And again, without getting into the pros and cons of it, it's clearly, I think everyone will agree that that's slowly going out. So that was some of the most efficient and most productive form of mining in West Virginia, and that's probably going to decline over the years.
And that's a matter of a declining reserve base as well.
That really is. I don't want to get into the into the fine points of all that's going on with that. And it's going on for decades, and respect everyone's opinions. But no matter if nothing happened, if there were no environmental pushback, if there were no litigation, if the EPA wasn't moving harder, it would still be declining because there's a finite amount of mountaintop reserve deposits in these ridges, and the good ones have been taken, and so that's going to decline of its own nature anyway. I think it's being speeded up now because of other issues. But then what's left is underground mining, and if we could show the next slide. Whoops.
That's an interesting slide.
Yeah. Can we go back? Can we go back? Well, let's see. Well, I had a slide of an underground coal mine face up to show the thickness of the coal bed. But there's a lot of talking about the reserves that are left in West Virginia. The mining people say this: all the coal that's left is either thick and dirty or thin and clean. And what you really used to have was thick and clean. And by clean, I mean it does not have a lot of rock and parting material in it. So if you're mining an extremely thin coal bed and you want to be productive, you've got to put in a large continuous miner, and you have to take height in order to get volume, to get production. So you're taking rock because you've got a very thin coal bed, and that rock costs you money to mine. It costs you money to get it out of the coal. If you have a thick coal bed with rock partings in it, same thing. You've still got a lot of rock. And that, while it's a sort of a vernacular response, that characterizes in a nutshell a lot of southern West Virginia's reserves.
Wow.
Very thin and clean or thick and dirty.
Wow. Alan, that's probably a good place to conclude. Believe it or not, we are out of time for this segment, and we're just going to have to have you back on the show to talk more about the characteristics